Hey guys, welcome back to the channel. I am Luke, your host, that big guy in the bottom left. If it's your first time here, we welcome you to the Gibson Hustle, where we discuss different hustles of business and investing, with the main driver to build wealth over time. This playlist is basically a weekly portfolio update where I hope to take you on a journey to grow 50k into $1 million over a 10-year period. This is going to be purely in the ASX. I am currently using the quality at value methodology. This is episode 11, and positive to announce, we just went from 64 to 66k over the last week. Now, before we get into it, I just want to personally welcome all the new subscribers. We had about a 30% count increase due to a couple of plugs by Cam from the QAV podcast that I am so blessed for. At the end of the day, this show is created by me purely for your entertainment, and if you want to see more or less, please let me know in the comments below. Alright, without further ado, let's get into it. Alright, to keep some structure to this video, you guys know the drill. We'll move through a few key areas. We'll look at the sells and the buys that we made this week. We'll have a quick overview of the QAV stocks performance, both over the last week and since inception. Then we'll have a nugget part where you should learn something new each week. Then we'll have the income and owner contributions, which will lead us to an overall portfolio value. And last but not least, a bonus sign-off quote. Well guys, as you probably know, with the news around the recent variant, the market was still really choppy and irrational last week. Both Westgold and Medusa hit our 10% capital stop losses. So unfortunately, they both needed to go. So with Medusa's dividend paid out, this gave us a total capital loss of negative 9.37%. In all honesty, this stock has been flirting and breaching our sell line on multiple occasions, as you can see on this 3-month daily chart, so it probably should have been sold in the past. For Westgold, he really didn't want to stick around. He only lasted in our portfolio for 2 weeks before turning quickly the other way. As you can see on this chart, we bought in on the uptrend on the 16th of the 11th, but with the way the market was acting, the price got quickly depressed, breaching our capital sell. There might be an opportunity later down the track to buy back in, but for me, I'll be sitting on the sideline for now. So with the recent sales of Medusa and Westgold, that put 18,600 back in our kitty. So with that plus some cash, we could take 2 full positions in new QAV stocks. Now with the choppy market, it was actually really hard to find some replacements, with most of the stocks being under their previous month's price, making them what we call a Josephine. We have chosen AMI, which is Aurelia Metals, a small tier gold miner over in New South Wales. I believe they have 3 underground mines with an opportunity to have a 4th mine soon, as per management's direction. Previous month's close was 0.43 cents per share. Our average buy-in was 0.42 cents. It is slightly under, and I should have waited for some more positive sentiment, but hopefully it will play out and it won't be on our sell side next week. The other stock is a well-known one in my industry, which is Capral, CAA ticker. Now I have wanted to own this company for a bit since it was hitting our list, as I am familiar with the aluminium products. Some of the alloy I procure actually comes from them. Previous month's close was $7.69. We bought in at $7.90. It has been on an absolute tear since the COVID cough, so hopefully it can hold the momentum. But welcome to the team, Capral. So how did the stocks do this week? Well guys, it was still pretty grim out there. It's hard to be positive when 6 of the 7 were in the red. Lucky that a few were only just under 1%, and Michael Hill came back slightly. Cycling Medusa and Westgold out also didn't help. We had an overall portfolio drop of negative 2.23%. Hopefully next week will be better, but this is all part of the training and keeping our emotions in check during the bad weeks. I'm going to butcher this saying because I couldn't find it online, but the process definitely can't all be roses and petals. Sometimes there are thorns and the share market can prick you. Alright, so since inception, we have a pure capital gain of negative 3.32%. The portfolio now has a dividend return of 1.95%. This gives us a total return of negative 1.37%. Ouch, but it does happen. Now for the updates on the list. Now I have changed this slightly with good reason. So for the buys, this means that the buy price is above the previous month's close and still above the buy and the sell line. So Capral, Challenger, Clearview are all still a buy. Now I'm going to introduce a hold. This means that the stock is above its sell line, but below the previous month's close. So Aurelia Metals, IVE Group, Michael Hill, Medusa, and Westgold are all a hold. Now I am going to focus on these holds because now I'm starting to understand when we should be buying in, depending on the last month. Now this one is obvious. It's a sell once it breaches its sell line or becomes a commodity sell. So COG and Ingham's are both below the sell line, so they're a sell. Now just remember, you should still go and do your own research on these companies. These are just some rules that we follow. So today's nugget section is going to be on the rule of 72. No, it's not the rule on when we should retire. It's actually a simple mathematical equation that we can almost do in our head, depending on the roundness of the numbers, for how long an investment will take to double, given a fixed annual rate of interest, of course. I don't know about you, but I think it's pretty cool. So you simply take the rate of compound interest you believe we are going to achieve, then you divide it by 72. Voila, you have the amount of years you are going to take to double your investment. All right, now let's use our methodology and this playlist starting capital as an example. So we have $50,000. As per the previous long-term rate of return by TK, he has an average rate of return of 19.5% per annum. Now this is an insane rate of return. Hashtag goals. So we simply go 72 divided by 19.5% equals 3.69 years. So in 3.69 years, we should have purely turned our 50K starting capital into 100K, then 100K to 200K in another 3.69 years, 200K into 400K and so on. You can see our compound interest really snowballs your first investment. Now that's pretty cool, eh? Obviously we need to compound a bit quicker than that to hit our $1 million. But that is where the owner contributions come in, which also compound within the years. But out of curiosity guys, what type of returns are you chasing? I'd love to hear some of your Rule 72s in the comments below. So we had some owner contributions hit the bank last week as per our trading plan. So $37.50 has been added to our CDIA account. Remember, also as part of our trading plan, when the CDIA account hits that magic 10K, we can start searching for our next QAV stock. Alright, so our cash account is now at 4479. So with our 4479 in cash, plus our 61864 in stocks, takes us to an overall value of 66,751 bucks, which is about a positive 3.6% total portfolio gain from last week. Well, that's a wrap, guys. Please make sure you guys hit that like button, subscribe if you haven't, and tickle that bell to get notified when my weekly updates come out. If you want to see anything else in the playlist, please just leave a comment below. I will try and reply to everyone. Now, I hope you all have a lovely week, and you all know the saying, keep healthy and wealthy. See you next week, guys.